You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we've got a conversation with Michelle Baio, who's the CEO of Finovator. She is the author of a forthcoming book called Mastering the Future of Finance, which you'll hear more about. And she's also the moderator of the Open Banking track at the upcoming Fintech South Conference. I should know that because I'm awfully involved in it down here in Atlanta, Georgia. And we'll be talking about all those topics with her in just a minute. You can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And if you've ever joined us before here for the podcast, you've probably been hearing us talk about the Innovation Club, usually focusing on the twice annual in-person events that, in fact, one of those is going to be coming up. Here we go, talking about that one again in the fall, September, October months. I don't believe the date's been set yet, but I want to remind you the group also meets virtually on a monthly basis. And if you haven't given it some thought already, I think it is a great way to stretch your R&D dollars. I'm sure any of the existing members of the club would vouch for that fact. They seem to be extremely engaged and also take away some great ideas and some pretty much ready-made technology that they can deploy in their own shops. If you want to find out more about it, we do offer guest passes, so you can come and see one of those sessions and see what it's all about. Check it out at the Best Innovation Group website, big-fintech.com. There's a tab for the Innovation Club, or just drop us a note. We'd be happy to tell you more about it. I guess I really can't call it a summer vacation because it's still the middle of summer, but the CU Town Hall is going to be back after a little break on August 19th, Wednesday, August 19th. Well, I guess maybe it is summer vacation because if you live any place in the Southeast, kids are back in school by then. We're going to be getting together for the next session at noon Pacific, 3 p.m. Eastern, as is our typical custom. Again, that's Wednesday, August 19th. John Best and I have been talking a lot about a bunch of stuff, including the recent very interesting case of the breakout, I guess you would call it, of a couple of OpenAI's models and going out and actually hacking another company. With fascinating stuff. He's got some interesting takes, as I'm sure you can imagine if you know John. It is free to join. We hope for a lively conversation, and we always seem to get one. You can join along. Free to join, but you do need to register in advance. cutownhall.com is where you can do that. And while you're there, you can also check out some of the past episodes that are sitting in video form as we have those conversations. A couple of quick things in the news right now, and not the burning, like just hot off the presses stuff, but a few things that I think are worthy of a little more attention that they've been getting. The latest instant payments data is out for the second quarter of 2026. Came out a lot faster than usual, and I have to think that's because the Federal Reserve in particular was probably pretty pleased with these numbers and wanted to get them some attention more quickly, as quickly as they possibly could. Really nice growth from the Federal Reserve on the FedNow systems. They processed just under 5 million payments over the course of Q2. That's more than double what they did just a year earlier, and they've nearly matched last year's total just within the first half of this year. So that's interesting. Another one that I think is interesting, and I read it as a good sign. I'm not sure if everybody else would agree, but to me, this is pretty important. Despite the fact that the number of transactions processed on a real-time basis more than doubled, the dollar amount that was being transmitted pretty much stayed the same. And because of that, the average size of one of the payments over the FedNow rails dropped from $100,000, where it had been kind of bopping around for 3-4 quarters, all the way down to $55,000. Still a pretty big number. To me, again, that's a good sign because it says that the product is probably being used for more regular, kind of situation. That's still a high number, and you'll see here a comparison point to that in a second. But it does say that it's kind of trending downward into a little bit more everyday adoption from a B2B standpoint, which is where they're not reporting it that way. But I've still got to believe the vast majority of the volume is on the B2B side. Not to be outdone, of course, RTP from the Clearinghouse put out their data as well. Again, remember the Fed's processed just a little bit less, literally a sliver less than 5 million payments in the quarter. The RTP system, which of course has been live for significantly longer, 142 million. So nearly 30 times more payments coming out of their system. Or looking at it another way, they processed almost the same number that the Fed did in the quarter every 3 days on an average basis. Their average dollar value is much lower, 4,000, even compared to the much lower number that the Fed is now reporting of 55,000. A 4,000 average. Some of that you have to assume, and again, I'd love to get more granularity on the details that both of these organizations put out. Hey, give me a call. I'd be happy to dig into it and go over it. Will I sign a non-disclosure? I'll have to think about that one because I'd like to really share this information with other people. I'm not sure why we're not entitled to understand some of this stuff. But we do know that Zelle is also part of kind of the same consortiums and overlapping ownership of the people who run the clearinghouse. And there's a belief that some Zelle transactions are actually going through there as well. So that's probably why you're seeing some more consumer-facing transactions. What I would love to see, I think B2B versus C2C, et cetera, may be more than we can really realistically ask for. I'd just like to see a median. I'd like to see, okay, we know what the average is, but as we all know, if you put 1 foot in boiling water and 1 in freezing water, you're on average comfortable. I think if we saw exactly how far above or below the average, the median sat, it would be interesting stuff. Maybe someday. So anyway, that's the latest on that. And I'll post some information along those lines. We've done kind of a tracker in the past months, and we'll try to add to that. The other news I thought was not that big a deal, but maybe got even more of attention than I thought it deserved. Everybody's been talking about the Apple Card and Apple Pay forever. Well, Samsung has now come out with its own credit card, a co-branded credit card in the US. It's called the Samsung Galaxy Card, and it's being done in collaboration with Barclaycard. So that'll be out there, and it's designed to be managed through the Samsung Wallet. They will offer a physical card as well. And they offer the typical kind of bells and whistles, including cashback specifically on Samsung products. I think the clear intent is to try to do a Me Too. Hey, it's not just Apple that's cool. Samsung can do it too. Bit of a different story. I have a hard time making an apples and oranges comparison, and frankly, I'm sorry. Samsung just isn't as cool as Apple. I wish them well. I don't see anything wrong with the solution, but it's hard to imagine that it's going to kind of capture the imagination the same way that Apple Pay does. Having said that, I haven't seen the Samsung Wallet in terms of how the two interact. If it can show some real benefit in terms of the way that people can manage their finances on an online basis, on an aggregate basis, hey, more power to them, and I'd love to see more about that. With no further ado, let's jump into my conversation. As I said, FinTech South is the driving factor for this conversation with Michelle Baio, but her new book is obviously a very interesting topic as well. And as you're going to hear, she's a big proponent of the notion of trust in financial services, which anybody who knows me knows that I can't shut up about it. So let me shut up for a second now, and let's hear what Michelle has to say. I'm here with Michelle Baio, the CEO of Finnovator, the author of the forthcoming book, Mastering the Future of Finance, How Data, Trust, and Tech Are Reshaping the Global Economy. And for the purposes of this conversation, also a speaker at the forthcoming FinTech South here in Atlanta, Georgia on August 18th. Busy woman. Thanks for taking the time, Michelle.
Thanks, Glenn. Happy to be here.
So let's start by discussing your firm, Finnovator, if you don't mind. I know you've been in the space for some time, including in the loyalty space, if I'm not mistaken. So just kind of give a bit on your background and what brings you here into the current role.
Yeah, definitely. I spent 20 years in the corporate space, so 6 years in telco, 8 years in online shopping, 3 years in payments and prepaid at Incom, and then 1 year in blockchain and digital identity at a startup. And largely, when I was at that startup, I helped launch WeChat's first top-up QR functionality in North America at 7-Eleven as a POC, and realized what a super app was, what QR payments were in early 2017. And it had me quite curious about the future of finance really coming out of Asia. And I wanted to learn more. So I took an Ivy course focused on blockchain, digital identity, and fintech. After taking the course, I jumped out of the corporate world, went to that blockchain startup, focused on digital identity and consent on blockchain, won Money 2020 Rise Up, which was back in 2019. And it was an accelerant program that they had for women. And out of 500, I was selected. So I was one of 30.
I
And when I
remember it
came
well.
in, yeah, and when I came into Vegas, it was this impressive group of leaders. And really, before even getting there, I didn't want to give the PR to the startup firm. I looked at my husband the day I got selected and said, I need to start a company. So basically, Finnovator was born in 24 hours based on the fact that I realized everything I've touched touches the future of finance. And it's very difficult to understand all aspects of the future of finance. So I've tried to find ways to utilize Finnovator to simplify the future of finance and help firms step into the future of finance, whether that be, touching buy now, pay later, or enabling a challenger bank infrastructure through prepaid, or starting to work with stable coins, anything that helps them start to satisfy their customers with the future of finance.
And
Is what our
this may be fintech firms themselves. It may be retailers looking for point of sale, convenience, all of the above. You work with all types of clients?
I do. Yes, it's been 8 years now.
Okay. I didn't mention, I don't know if it's worth kind of adding to that list. You're also involved with the Open Finance Network of Canada, correct?
I am. I've been the president for the last 5 years. I've been on the board for the last six. And really, we're an advocacy group trying to bring the network together of different parts of the ecosystem to drive consumers and SMEs benefits from open banking forward and open finance. So it's been a great journey of advocating for data rights.
I'll be very curious. I'd like to come back to that one when we talk about, particularly kind of Canadian versus US differences, because I think you've obviously got a nice view into both of them. Also want to just follow up. I believe this is going to be your fourth year coming down to speak at FinTech South. And I'd love to get your perspective, given that you're coming not only from another state, but from another country to do that. Can you talk a bit about what you see in FinTech South that kind of distinguishes it from other conferences on the very packed agenda?
Definitely. So when I worked at Incom, I spent a lot of time in Atlanta because that's where their head office is. So coming to FinTech South was very familiar to me, especially because it's the heart of a lot of the American payments ecosystem. And being a payments geek, I love surrounding myself with other people who care deeply about payments and payment innovation. And coming into FinTech South 4 years ago and attending for 4 years, it's really seeing that ecosystem of merchant payments at the same time as fintech innovation, as well as having the community of universities and students have such a forefront play at the event, and seeing so many students come in and be eager to learn what the ecosystem's all about. And I'm very lucky that I've been moderating and hosting the open banking section of FinTech South for the last 4 years. And it's been such a pleasure just having such incredible leaders come join the panels that I've been moderating and having the discussions that really need to be had to push the ecosystem forward.
So I was about to ask. So you actually this year again, you'll be speaking, kind of moderating that panel on open banking, or that overall kind of track?
Definitely. It is a topic I'm extremely passionate about. And I'll say this for many people who maybe not yet passionate about open banking. I come from telco. So I come from a place where you didn't get to own your phone number back in the day.
Yeah,
I
I
used to
remember.
sell plans, and if they were no longer happy, they had lost their number and would come to us, and we'd have to get them a new number, and they'd have to go out to their entire family and friends and share some new random 7-digit number that felt like they lost their identity. So when number portability became a mandate, not just in Canada, but the US and around the world, and the telcos no longer owned that number, it became the ownership of the consumer. That was the first play in data ownership. And open banking is the next step to allow us to take our banking data. So if I switch banks, I don't come in as some new 18-year-old. I come in with who I am, what I need, and what I'm using, so that they could perfect the products they offer me. And this needs to move beyond open banking to open data. So if I no longer like my AI model that I've trained, I should be able to pick it up take my data in a structured form and move it safely and securely through an API to a different model. So data ownership is something I'm extremely passionate about.
You've really hit on a bunch of things that I kind of hadn't really given full thought to. Is one, the data portability becoming, talk about doubling down, tripling down, whatever with AI. You're building your models there. That just creates even a greater, need and imperative for some kind of consistency there. I was not aware. I've always thought about the data portability or the phone number portability as a U.S. centric issue. I didn't realize the other countries did all countries kind of move in that at roughly the same time? I thought the U.S. was a laggard there.
I think we were around 2012, if I'm not mistaken. And I
We
think
being the U.S.
Canada was 2012.
Okay.
But every country had a different year. But I do think it's been at least 10 years where
Yeah.
almost everybody owns their phone number. And I think everyone can relate to that use case,
Oh
right?
yeah.
Because you never want to call your friends and tell them you no longer have this number. Back in the day when we used to memorize numbers, especially.
I remember that well. I mean, in just before, just as cell phones were kind of coming into, mass adoption here in the US. And that was a major hassle. You mentioned something else I hadn't thought of too, is, somebody who's 18 years old, we've got that weird phenomenon of people staying on their family's phone plans into their 30s and 40s. Well, it's a whole lot easier to do it if you can actually just break away and take the number with you, because that's a pretty big, set of golden handcuffs, I guess I'd say.
It's freedom.
Yeah, that's what it comes down to, I guess. Um, Going on to your book, and it sounds like a lot of the things you do kind of come together in the book that you've put together. The title, "Mastering the Future of Finance," I guess also speaks to a masterclass that you put on this too. And then you've got a podcast that you've actually leveraged a lot of the interviews you've done for this. I believe the book is coming out September 22nd, if I'm not mistaken.
You're right on point. Yes, September 22nd. And it was a journey. I built the masterclass to try and help people understand the future of finance because I found myself trying to train my staff on what is prepaid, what is BaaS, what is open data. And it's a very long process to try and get people's heads around a lot of these concepts. And it's hard to do one by one. So having a structured course was something I built about a year and a half ago. And then I got reached out to by Wiley and grateful that I signed a contract with them last July and actually had an 80,000 word mandate. So I've written 81,000 words on the future of finance. And I really brought it down. I was helping my daughter with chemistry at the time, and that is not my top subject, but it just had me think about like, these are the 9 elements of the future of finance. And I created kind of a chemical chart of the 9 elements of the future of finance. And the book is done into 3 parts. So the first part of the book is really about data and innovation. So think about like the first chapter is about fintech and how it's so powerful in inclusion. The second chapter is about the technologies fueling it, which is BaaS and prepaid and how they work and what they're enabling. The last chapter in the first part is really about embedded finance, QR payments, agentic finance, really anything that touches the new ways to pay. And then we go into the middle half of the book, which is about trust. And it's talking about first open banking, open data, and open finance. So that concept followed by digital identity. And it doesn't have to be a national digital identity. It could be a bank ID. It could be a decentralized identity, just some form of trust. And then the sixth chapter is about defense by design and embedding compliance at the beginning of building anything, because it actually helps you build consciously and try and put defensive mechanisms to try and combat against AI attacks early. And then the last half of the book is about just disruptive technology that is helping drive this incredible innovation. It starts with AI. It goes about AI ethics, AI cleanliness, data rights, and then it goes into blockchain, how it's empowering new technologies of trust and auditability, and then going into the last chapter, which is really about digital currencies, stablecoins, and tokenized assets, and then round it all back together that these 9 elements are fueling the future of finance.
You've mentioned trust a couple times, which is right up my alley because I spend more time on that than anything else. I'm curious on your perspective. Where do you think the trust equation stands these days relative TradFi versus some of the new players? Who has the advantage? Is that a diminishing gap between the two? How do you see the landscape?
I think trust is the new currency. It's really the element that consumers tie into. If they trust you, you can offer them something, but you really need to consistently hold that trust. And I think people need to realize that you could break trust really quickly. So, trying to ensure that you have really thought out products, and when you're going to test and bring things to market, that you're trying to protect data for the consumer, that you're trying to give consent based offerings, that you're trying to only use the data that you need to facilitate this product. Like, just really treat your customer and their data like you're a vault. And I think that that's something that a lot of companies aren't fully thinking about. But to me, data protection, like one data breach, is something that can change how you see a company forever.
One data breach can ruin your whole day.
That is for sure.
Good point. And it's an interest. And I noticed that you say company rather than financial institution. I think the trust, like you say, half the breaches we hear about are not with financial institutions. So, you're applying this not just to the companies that are in the financial services realm, it sounds like.
No, I have this thought, or this, the industry that I feel needs regulation is hotels. They hold
Hmm.
so much sensitive data on every individual, but they don't seem to have regulatory mandates on how they hold that. They're holding our passport, our address, our credit card information, and there's been, a lot of unfortunate breaches.
That is interesting. I hadn't well, hopefully hopefully the wrong people aren't listening to this and getting some soft underbelly ideas. But wow, that's fascinating. I mean, I think obviously people think about the medical side as well, in terms of where, people are sharing social security and other types of personal information. But yeah, I hadn't really thought about hotels. Do you
Yeah, I
think
think there
go ahead, sorry.
I was just gonna say, I think there should be some QR sign in. Like, I shouldn't have to like validate that I am who I say I am, and I have got this hotel for the night, but I shouldn't have to give them a digital copy of my passport for them to hold securely.
That is interesting. That is very interesting. What do you, from the financial services and financial institution standpoint, do you have a feel, do you think that at this point, do the banks and credit unions have an incumbent's advantage, or are they actually kind of disadvantaged by being thought of as being behind the times, whether from a trust standpoint or a security standpoint?
I think they have an advantage because at the end of the day, I was just talking to someone about AI. Who do you want to be your agent? Who do you trust? Like, if we're going to move into agentic payments and I'm going to trust an agent to go execute on buying me Nike shoes for my daughter, who do I trust to hold my credentials and hold my credit card and finish that transaction and audit that transaction? I think I would trust a financial institution
I would,
faster
I
than
would
I would potentially trust an AL, like a LLM model.
I agree, but then again, I think I'm even in an older demographic than you are, so I'm not sure if I can necessarily generalize. But that's a really good point. And then, as you mentioned, LLM models and whatnot, you get into the trust aspect of agentic payments, which I'm sure is something you've been given some thought to as well.
Definitely. And we're not there yet because we need to figure out the liability models, the auditability models, who's responsible if the agent goes rogue. Where does the merchant have protection points? Are we still going to use cards so that they have dispute mechanisms? Are they going to use stable coins? And then what is that going to do to the fact that it doesn't have models built
Hmm.
into that infrastructure? Are we going to use prepaid cards because we don't trust them to hold our credential? That is our core credential. There's just so much to unpack before we unlock agentic finance.
I've never been a prepaid card user, but I've definitely given that a lot of thought that I'd like to limit the downside in a lot of these cases. So I'm also curious, kind of just given your perspective on, sitting in Toronto, Canada, I believe. What do you see? Clearly, you've done plenty of work in both countries. How do you see both the trust equation, the receptivity to some of these new models, the innovation aspects? How would you compare contrast the US and Canadian markets? Obviously, it's a very different kind of ecosystem from a banking standpoint in terms of the sheer number of licensed institutions. But I'm always interested in anybody's perspective on that who has a different, vantage point.
Definitely. I think the US is known for innovation and willing to take risk. And I think that has been a benefit to the US market because you have a lot more competition. Your products are a lot more affordable, a little bit more unique. And there's this hunger to compete. So as a consumer, you benefit from that. And I think that that's definitely an advantage. There's definitely some challenges that have occurred, some bad actors needing to clean up because there is this ability to take risk and run forth. And that's not always with good players in the way that that's formulated. But I think that the US market is ahead in many respects because of their willingness to take risk and run. On the Canadian market front, we're a little bit more risk averse. So taken a little bit longer to facilitate new innovations. And our banks are more of an oligopoly, so they kind of lockstep. The product is the same, but really just a different color. There's only 5 core banks here,
Right.
and about maybe 120 institutions when you consider credit unions and smaller banks. So I think the US market definitely has an advantage of innovation and competition. The Canadian market has a little bit more regulatory, so a little bit more stable in the offerings, but more expensive for sure.
This might be kind of a self-fulfilling prophecy. I'm kind of curious what you think. Do you think it's the risk aversion? Is that sitting on the bank side, or do you think would the consumers have an appetite to be a little more aggressive on these things, or are they just as risk averse?
I think, Canada's behind. And we have a lot of people coming to Canada from other markets that come to live in Canada. And they're like, why are we still using checks? And I think that's the same comment for people coming into the US. Like they don't understand that coming in from Brazil or India. They're like, we got rid of these before I was born. So I think we're still laggers in some points of infrastructure. Like we don't have real-time rails yet. And you guys have 2 real-time
Yes.
rails, but they're not mandated to have money in and money out. So you've made your real-time rail a complex ecosystem, where
Oh
in
yeah.
India, Brazil, Singapore, a real-time rail is a real-time rail. And it just means money moves this second to wherever you need it to move. So I think North America in itself is a little slower, like open banking, same concept. We've been more market led in North America, both the US and in Canada. Canada's just starting to move. We call it consumer driven banking, but we're still probably a couple years out. The US has been phenomenal at a market led open banking with over 100 million users plus today, and largely through aggregators to you don't even realize you're using open banking because you guys have had a great market led ecosystem utilizing, MX and Plaid and Akoya and many others to facilitate the safe data sharing between the banks and the fintechs and the consumers.
That's always been my belief that it has to be something that people don't even realize is happening. If they have to give it any additional thought, that's enough of a barrier in itself. I was not aware that Canada didn't even have the real-time payments rails open yet. Is that something that's in discussion, or is it kind of like a don't ain't broke, don't fix it kind of approach?
It's been a 9-year journey of start and stop, and they're in testing this fall and supposedly going live next year. So I think because it's been a start and stop, there's a lot of no one's holding their breath anymore. But we do believe we'll eventually get it because 88 countries already have real time rails.
And is that a central bank initiative or in a consortium model between the big five?
It's a Payments Canada, Interac, and IBM
So public-private.
ecosystem. Yeah.
Got it. Because Payments Canada is that also a consortium itself, or is that the public entity?
It is an organization that is membership driven by all of the banks and actually being open to other fintechs to join in the last couple of years.
Got it.
So
Well, yeah, and it's interesting you mentioned that, the U.S. being further along and the fact that we've actually gotten there without, only that brief period where we actually had Section 1033 in place and then it got rescinded. So still is not even the law of the land per se, but, again, the market has actually spoken in itself.
Yeah, 1033 is still being reviewed. And it looks like the comment that came out maybe a month ago is that they are going to allow for some type of data charge potentially, which has been a contention point, I guess, in the 1033 play. So it's still with the CFPB, and we'll see what happens.
Yep, that's interesting times. But again, the good news is we're not in total like gridlock. We're actually moving forward, with market necessities too. Well,
Definitely.
Michelle, I guess I'll be seeing you down here August 18th in Atlanta for FinTech South. Definitely,
Absolutely.
yeah, that open banking session sounds like a can't miss from my standpoint. Um, your book will be out about a month after that. Anything I believe will provide a link for a pre-order that's already available.
Yeah, it's available for pre-order on Amazon as well as Barnes and Noble, and it will be coming out in the UK, the US, Canada, and other countries as of September 22nd.
And then your own podcast as well. We'll post a link to that. I'm sorry, the name of the podcast?
Step into the future of finance. And it really came about because I just had such incredible interviews in the book, that I had to share them as soon as possible. So it's almost been a year. I think September will actually be my 1 year anniversary of the podcast. And it's really talking about the future of finance and digital identity, the future of finance and cyber risk, and just different topics, because you could talk about, stable coins and tokenized assets for an hour, and not even scratch the surface. So hopefully this helps people understand a little bit about what's happening in ecosystem from some incredible experts.
Wonderful. Michelle Baio, CEO of Finnovator, but as we've heard, a lot of other irons in the fire, including FinTech South here in Atlanta coming up in August. Thanks so much for taking the time. Looking forward to seeing you in August.
Looking forward to seeing you too, Glenn. Thank you.
Got a discount code for you as well. If Michelle can make it all the way down from Canada for FinTech South, I figure that's a pretty strong statement that it's worth your while to travel. Single day event taking place on Tuesday, August 18th at Truist Park. Baseball fans may recognize that as the home of the Atlanta Braves. Obviously, they're out of town that day. All day event, lots going on, and a lot going on kind of on the periphery too. In fact, Michelle shared with me that as she mentioned her own podcast, that actually got started. The very first interview that she did was based on a conversation that pretty much spun up at an event that I took part in the evening around last year's FinTech South at a law firm as she was moderating a panel, and it was about AI. And she got into a deep dive on it and realized this is too good to just share to just the person she was speaking to and saving it for her book. So she turned it into a podcast too. So those are the types of things and opportunities you see. I mentioned we have a discount code, and that discount code is BEYO15. I believe it's all caps, BEYO, which is Michelle's last name, 15. That will get you 15% off of the registration fee for FinTech South, sponsored by the Technology Association of Georgia, who I'm also involved with. 15% discount off of that. Hope to see you there. Hope to see you next week, too, for the next episode of The Big Cast. My name is Glenn Sarvati. 154 Advisors is my firm. But we're doing this on behalf of the Best Innovation Group. You'll find our grad poobah, John Best. You can find him on LinkedIn. You can find the Best Innovation Group on LinkedIn at Big FinTech. That's his handle for all types of social media as well. As I mentioned, the Innovation Club coming up yet again. If you're interested in a guest pass and sampling what we have to offer there, let us know or check that out on the website at the Innovation Club tab. We'll have new content for the Big Cast again next week. You can always find out more there, again, at the website big-fintech.com. Click on the Media tab. You'll find a couple of recent blog entries we've done as well, both a couple of interesting recent topics around the attempt for Stripe to acquire PayPal, and before that, around the Federal Reserve payment study. And as I mentioned, we'll probably throw some stuff up there as well around the latest in the instant payments data. You'll also find all of our past episodes of the Big Cast. And if you are not listening on a podcast player or audio player, you can always check out the past episodes there. But if you're listening on Spotify, Apple Music, Amazon, etc., please like or subscribe. You'll be alerted when the new content comes out, usually on Tuesdays, and that will be the case next week. And until then, we thank you as always for listening. Have a great week.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.